Welcome back. This is the Capital Point, where we engage decision makers at the helm of businesses and institutions that shape Kenya's economy. If you're just joining us, the hashtag is the Capital Point. Please follow at Metropole TV Kenya at Terryanne Chebet. Now, this week's edition of the Capital Point is shining the spotlight on deposit protection in Kenya, a function that is under the watch of the Kenya Deposit Insurance Corporation. Here to delve deeper into this topic is the Chief Executive Officer, KDIC, Mohamud Ahmed Mohamud. I've said it right now. Yeah. My sincere apologies for introducing you wrongly at the beginning. I guess first question first, just unwrap for us what KDIC is all about, especially for the Kenyan out there who may not have a great idea of KDIC.
Good. Thank you. Thank you, Terryanne, and thank you, Kenyans. And let me unbundle about this concept of deposit insurance. And before KDIC, there used to be Deposit Protection Fund, which used to be a department in the central bank with a limited mandate of providing deposit insurance for member institutions, and two, to liquidate institutions when DPF is appointed liquidator by the central bank. Indeed, Kenyans used to know DPF as the people who close banks. DPF never closed banks, but DPF used to to manage that liquidation process until the winding up. That's what we call the limited mandate. And DPF started in 1985, but operation-wise it started in 1989. And it has so far liquidated 25 institutions. I know, Terryanne, you may not remember some of these are the trust banks, Reliance Bank, some of those old banks. Come 2010, okay, DPF, as much as it had a limited mandate, it was indeed a department of central bank, where it had a board being chaired by the central bank governor. And it didn't have its own act. It was actually deriving its powers from a section of the Central Bank Act, indeed Section 35 and Section 36 of the Act. So 2010, it was found prudent to take DPF now to the next level. And we started with the idea of now graduating into a deposit insurance with what we call a broad mandate, with more responsibilities, with more powers. Then we came up with the idea of now starting Kenya Deposit Insurance Corporation, also in line with the international best practice, and countries were moving from the word protection to deposit insurance. Although a lot of people still like the word protection, but our tagline is still to protect your deposits. Although now we have even redefined it. We want to call it protecting your bank balance, so that people will understand what we are protecting. Then what is KDIC? KDIC has what the broad mandate, which we call a risk minimizer. Indeed, KDIC's now role and responsibilities are zero into risk management. We know risk is what makes bank fail. So we said now we have also to address the issue of the symptoms. Of course, we are working in a complementary and in supplemental role with the Central Bank of Kenya and the National Treasury. That's why we are called the safety net players. And then we have what we call the public policy objective, which we all drive, which is fostering financial stability. As much as we have our own mandate, Central Bank has its mandate, Treasury has its mandate, we all converge into the public policy objective of fostering financial stability. Because we are all aware that financial stability is the lifeline of our country. God forbid, in case of any instability, we don't want to talk about it. So that is now where now KDIC now is coming in. KDIC has the mission of KDIC is actually divided into three aspects. The first mission is to provide an effective deposit insurance. What does this mean? is to provide an insurance that in the unlikely event of a bank failure, we insure our depositors up to a limited amount of 100,000 Kenya shillings, which now we have now revised effective next year to 500,000 shillings. A lot of people have been saying, why 100,000? 100,000, indeed, we cover 97% of the depositors. 97% of the depositors actually own 100,000 and less in the banks.
Yes, yes,
now,
that's true. I remember the report
released
recently.
Yes. Now, when we have now increased it to 500,000, we have now moved to 98%. However, we are also not forgetting the other 2%, who indeed also now own almost 90% of the deposits. Because, you know, Kenya is a micro country, and that is why the issue of risk management is key to Kenyans. Our second mission is to provide incentives to our member institutions. And Terryanne, our member institutions are financial institutions that are licensed and regulated by central bank. Deposit taking, these are banks and microfinances. And they must be licensed and regulated. So we don't want anything to do with we don't deal with the Shylocks. So I'm asking all Kenyans to make sure that just put your money in the licensed and regulated commercial banks.
And they will be protected.
And they will be protected.
Okay.
But you put your money elsewhere under the mattress, we are not protecting that. And indeed, why have we increased our coverage to 500,000 is to encourage Kenyans to have the culture of a saving. It's good Kenyans have a saving culture, but also is to deepen that culture. So that we don't keep monies with the kiosks. With the kiosk man, when he closes, he goes with your money. Or you keep it in the house where there are the two R's who will invade your money, the robber and the rat. So please bring your money to the banks so that we can also develop our country. Because that is the money which will be used now in developing our country as much as you have developed yourself. Then the third and most critical part and aspect is what we call prompt resolution. I'm seeing you talking about receive, liquidate, and all that.
Yes.
We want to tell Kenyans we are not there to liquidate. We are there to resolve. And I want Kenyans tonight to understand this aspect of resolving a bank problem. We want to assure Kenyans that with KDIC, once it is in its full throttle, which is almost there, with very close relationship and close coordination with the Central Bank of Kenya and the National Treasury, our ultimate objective is to avoid bank closures in our country. So Kenyans don't ask me why 500,000, why not 2 million. First and foremost, let us avoid reaching there, like what we did with Chase Bank. Chase Bank, 75% of their deposits have actually now been transferred to another bank where now you can access 75% of your deposits. So those are the three key missions which we want Kenyans to understand where KDIC stands.
What is the plan with the 2% of the Kenyans who have in the banks a lot more than 500,000 shillings? What's the plan? What's the future plan?
Excellent. The future plan for the 2% and even the 98%, I'm still repeating myself, is we want to ensure there are no bank closures. What are the initiatives we are putting in place? One of the initiatives is from next year, July next year, we are going into what we call risk-based premium. As we speak now, we charge banks a flat rate. But from next year, we are going to charge what we call risk-based premium. The higher the risk in the bank, the higher the premium we're going to pay. And this is in line with our mandate of risk minimization. You can see how it ties.
The higher the risk of the bank,
yes,
the higher
the premium they're going to pay us.
And how do you measure the risk of the banks?
Good. The risk of the banks will be measured through an instrument called the Camel rating of the central bank. It's not the camel which you know about. Indeed, when we came up with this initiative 2 years ago, the consultant came with a very complicated model, Terryanne. Indeed, I remember I looked at it and I told him, no, we want to start from unknown to the unknown. What is known? We have the Camel rating because the supervisory authority is vested in the central bank. So the central bank will do the supervision of the bank and rate the bank for us. Then we'll get those ratings. That's the rating we are going to apply in now charging you that premium. So we have already prepared the banks, and we have had a lot of engagement with the banks, and the banks are ready now. Because initially, the big banks were saying that, why are you charging us the same rate? Because we are kind of subsidizing what they call the inefficiencies of the small bank. And KDIC stands for equity and market discipline. So the only initiative which will combine those two aspects is what you call risk-based premium from 1st of July 2020.
In your opinion, and based on where KDIC is going and the conversation we've just had, what is, in your assessment, is the current financial status of the banks as they stand today?
Terryanne, I can assure you the financial status of the bank is sound, strong, but we can make it stronger. We can make it stronger by now all of us playing our roles. Even the banks will also be playing their role because they are our membership. And you have heard our second mission is to provide incentive. Us will provide, but the people who will make sure that the risk is managed in these banks are the bank themselves. And there's something I want to repeat, which I share in every forum that I address, is that banks, as much as they are private entities, they are holding a public asset called deposits. So as much as you are private, just know that you're holding a public asset called deposit, which must be jealously invested, guarded, and well protected. So the risk management even starts with our membership before it comes to us. So we'll be engaging with our membership, we'll be engaging with our banks. Very soon you will see we'll even be putting stickers in the banks saying these banks are members of Kenya Deposit Insurance, because we want to make deposit insurance a household name. And we want the banks to play their effective role so that we can all join together to mobilize the resources which are out there and invest prudently for the benefit of all Kenyans.
What is the size of the fund under KDIC's management currently?
Yes, the size of the fund so far is slightly over $1 billion, 100 billion shillings. But that money is still not enough, because in the unlikely event of failure of all banks, my exposure now at 100,000 is 300 billion. When we have increased to 500,000, my exposure now has moved to 500 billion. So one of our other objective is to manage and grow that fund. That's why we have to invest, and all our funds are invested in government securities per law.
100%?
100% government securities. That's per law. Because we have to protect this fund, because this fund belongs to the Wanjikos, the Achiengs, and the Fatumas out there. That is why we must protect this money and grow it for them. Okay, grow it for them, so that in the unlikely event of these failures, we also want to assure Kenyans that in the unlikely event of a closure, we are not going to have banks closed for 4 years, no. We want to assure Kenyans we are going to be more proactive. KDIC now, indeed, what I can say is that we have already taken off. We are trying to get our altitudes. So one thing we want to assure Kenyans is that in the unlikely event of a closure, we want to minimize closure by within a maximum of 6 months. But this one is subject to our close coordination and cooperation with the central bank and the National Treasury. Because the central bank is the one which holds the supervisory and has the supervisory powers. So information sharing, very important, okay? And a lot of collaboration, very important, because you find some other countries tell you that they close on a Friday and open a bank on a Monday. There's no magic to that. That means that 6 months before they have done that, they were already in that bank and they have already corrected everything, and then now they're announcing Eureka, close Friday,
Monday.
Mohamud Bank closes Friday, Monday a strong bank called Terryanne Bank is already open there, and Kenyans continue doing their business.
So that's the model.
That is the model, and one thing I want to assure Kenyans, with their support of our membership, and with the support of all the other institutions, that is our ultimate goal in this country.
Tell me though, so we're seeing a lot of collaboration and mergers, acquisitions within the banking space. From where you sit at KDIC, how does this affect your operations, and how do you work around that? Indeed,
it doesn't, because mergers and acquisition is one of the resolution options. It's called M&A. It's because we have what we call a package of resolution options. So you have seen mergers and acquisitions. You have seen what we call transfer and exclusion, what was done in Chase Bank and which now we are doing with Imperial and KCB. All those are actually, I like calling them, this is the we call it the banquet, the banquet.
The bouquet.
Yeah, the bouquet. Thank you, thank you. This is the resolution bouquet that we have, which will apply on these banks. Yeah. This is what we call bridge bank. This is what we call open bank operations. We have about 10 to 20 options that we can use. So mergers and acquisition is one of them, which we have used in this country. We have also used the transfer and exclusion. Also, why you hear, assets are being transferred and assets are being excluded. Yeah.
Let's talk about the depositor now. As a person, for instance, the ones who were in the banks that I mentioned earlier. What's the process like? So a bank has unfortunately collapsed or been liquidated. Yeah. What is the process of a depositor getting their money back?
Good. Now, if now we go historically, where we didn't have these powers of what we have done with the Chase Bank and what we intend to do with Imperial. Before, the first thing we do is we pay the 100,000. Then we start now realizing the assets of this institution. And unfortunately, most of these old institutions were institutions which were operating when we had very weak prudential guidelines. So you find even the assets that we have inherited are so bad that you cannot, when you hear us doing fourth, fifth payment in the papers, indeed that's my happiest moment. And Terryanne, all is not lost because internationally, comparatively, Kenya stands, Kenya Deposit Insurance Corporation is actually being emulated by other deposit insurances because so far when they are looking at the percentages of recovery from this liquidation, Kenya is rated the highest. We are at an average of 22%.
What's the average?
And most of them are between 9 to 12%. So Kenyans, let's not blame ourselves. Indeed, we are already there. But we said we don't want to be 22%. Chase Bank, we have gone 75%. Imperial so far will go another 40%. Then we'll still invite other banks to come and take more of the assets.
Imperial assets.
Yes,
is
Imperial.
That why it has taken quite a while to compensate?
Yes, not for Imperial and Chase, we indeed innovated a new method for it. Imperial and Chase, we enable depositors to access their money when the bank was in receivership, which has never happened in this country. Normally we wait for liquidation, then you get the 100,000. In Imperial, I have so far paid 35%. 93% of the depositors of Imperial have been fully enabled to access their accounts. They have taken their monies. In Chase, when we paid 1 million, we indeed we enabled 93% of Kenyans. And actually that was an innovation which we developed, and we said Kenyans should not wait for long. Let us enable, because the deposit insurance stands for the small, vulnerable and unsophisticated depositor. Those are the Wanjikos.
Could you clarify for me the current status of Dubai Bank Kenya?
Dubai Bank, we placed it in liquidation, and actually it's going through the liquidation process. And very soon you'll hear us. Indeed, for Dubai Bank is also another case study where you find 98% of the loans were non-performing with no securities. So it's like getting blood from a rock. But we have managed, using whatever initiative which was there, we have already paid the first additional payment from the 100,000, and soon we'll be paying another additional because we have made up some good recoveries.
Any timelines for that?
And you know the process of payment takes a little bit of time because it has to go through some regulatory processes. But we want to projection maybe Q1 next year. I think we should be able to pay the depositors.
All right.
Yeah.
So tell us about some of the key challenges that KDIC has faced over the last 2-3 years, because it's been quite a few interesting years. Yeah.
Indeed. Thank you for asking that question. One, and I like the way you put challenges, not problems, because challenges we can convert into opportunities, isn't it? Sure. One of the key challenges are litigations. You find people rush to court to even frustrate us from realizing this asset. And one thing I want to assure Kenyans, and I've even engaged so many other institutions where I normally go to present these kind of discussions, and I tell them that we are all customers of KDIC, you included. I remember I went to another forum, I don't want to mention the name, and people are wondering, what is this man coming to tell us? And the first question I asked them, can any one of you who doesn't have a bank account raise up his hand? Nobody raised up his hand. So I told them, you're all my clients. And I could see now everybody now was sitting and listening to me. When I finished, the kind of questions which were being asked was unbelievable. And they said, you mean this is what KDIC does? So KDIC is your right partner. KDIC is there for you as a Kenyan. KDIC is not in that tower up there collecting money for our own use, no. All this money, we give it back to Kenyans. We are there to protect the lives and properties of Kenyans in the financial sector.
All right.
Yes.
As we come to an end of our interview, what do you see changing in the coming years in as far as banking and banking institutions are concerned?
Excellent. That's an excellent question. Indeed, and I fully subscribe to this, the future of banking is financial technology, fintech. And one thing, Kenya, we are lauded on that area because of the M-Pesa, the M-Shwaris, so many applications. The future of banking will be branchless banking. We'll have banks in our phones. We'll have technology. Even as in deposit insurance, I sit in the board of the International Association of Deposit Insurance. And one now of our key, not challenge, but opportunity is we are looking at how do we protect and how do we kind of encourage financial technology and how do we protect it. So the future is technology. We cannot be left behind. Indeed, today all of us are on our M-Pesas. Wherever you are, you can access your bank account, you can transfer money. It is a revolution in the financial industry that has put Kenya into the world scene.
Absolutely.
Indeed, when I go, because I do a lot of presentations internationally, the first question they normally ask is, tell us about M-Pesa. Actually, I speak more of M-Pesa than KDIC. And those are the kind of initiatives which we should harness, which we should deepen, and we ask our young people who are in the universities to do for us more research, so that we don't want the brick and mortar. We want banks, so that banks can also manage their costs. And by managing their costs, they should be on those kind of platforms.
That's true.
Yeah.
Absolutely. Mohamud Ahmed Mohamud, the Chief Executive Officer of Kenya Deposit Insurance Corporation, of course, giving us in-depth information about KDIC's operations in the country and giving us as Kenyans his assurance that our deposits are indeed protected. You've been watching The Capital Point. My name is Terryanne Chebet. Let's talk business again next Wednesday.